Hello friends, today's topic is significant case laws. In this topic, we will be studying what are the litigative issues related to the provisions of the salary. Hello friends, so the first topic in the significant case laws under the provisions of salary is CIT versus Shankar Krishnan, which was held by the Bombay High Court in 2012. Under this, the issue under consideration is where the rent-free accommodation is provided by the employer to the employee and security deposit is paid by the employer to the landlord, then whether a notional interest can be calculated and whether such notional interest can be termed as perquisite in the hands of the employee and accordingly taxable in the hands of the employee. So, issue under consideration: can a notional interest on security deposit given to the landlord be included in the perquisite value of rent-free accommodation given to the employee? Facts: the SSC, a salaried employee, was provided with rent-free accommodation by his employer. The monthly rent paid by the employer in respect of the said flat was 10,000 per month. The employer had given an interest-free refundable security deposit of 30 lakhs to the landlord for renting out the said premises. So it is a customary practice for the landlord. It is a customary practice for the employer or for the tenant to give a security deposit to the landlord before the rent-free accommodation, before an accommodation is provided by the landlord to the tenant. So in this case, the security deposit is provided by the employer to the landlord. As the rent is paid by the employer to the landlord, accordingly the security deposit is also provided by the employer to the landlord, and whether there is any interest, whether any notional interest can be calculated on this security deposit, and if at all notional interest can be calculated, whether that can be considered as a perquisite in the hands of the employee or not, is the contention of the assessing officer. The SSC employee computed the perquisite value on the basis of rent of 10,000 paid by his employer to the landlord, since the same was lower than 10%, now 5% of salary. So, as per Rule 3 of the income tax rules, the perquisite on the rent-free accommodation is calculated as 15% of salary. Earlier it was 10%, now it is 15%, or when paid, whichever is lower. The SSC had computed the perquisite based on Rule 3, in which the rent paid by the employer to the landlord was considered as a perquisite value as per Rule 3. However, the AO is of the contention that even the notional interest will be perquisite. The AO assessing officer, however, contended that since the employer had given interest-free deposit of 30 lakhs to the landlord, interest at 12% on the said deposit is required to be taken into consideration. So this interest amount, this notional interest amount, is on ad hoc basis by the assessing officer. Accordingly, he enhanced the perquisite value of the residential accommodation provided to the employee by such notional interest. And the Commissioner appeals upheld the decision of the assessing officer. So the employee has filed a return considering that the perquisite value is only on rental income, is only on the rental paid by the employer to the landlord as per Rule 3. However, assessing officer contended that even notional interest is to be added, and Commissioner appeals is in favor of the assessing officer. Now, ITAT's observation: the tribunal observed that as per Rule 3 of the income tax rules, the perquisite value of the residential accommodation provided by the employer shall be the actual amount of lease rent paid or payable by the employer, or 10%, which is now 15% of salary, whichever is lower. So these are provisions of Rule 3. So ITAD's observation is as per Rule 3. The tribunal therefore held that there is no concept of determination of fair rental value for the purpose of ascertaining the perquisite value of rent-free accommodation provided to the employees. So ITAD's observation in this case is the perquisite value should be calculated as per Rule 3 only, which says that the rental value should be considered for the purpose of calculating the perquisite value. High Court's observation: the assessing officer is not right in adding the notional interest on the security deposit given by the employer to the landlord in valuing the perquisite of rent-free accommodation. So ITAT and High Court were in favor of the SSC, saying that the provisions of Rule 3 will be applicable, and Rule 3 says that only rental value is to be considered as a perquisite value. Since the perquisite value has to be computed as per Rule 3, and Rule 3 does not require addition of such notional interest, and Rule 3 does not require addition of such notional interest, thus the perquisite value of the residential accommodation provided by the employer would be actual amount of lease rental paid or payable by the employer, since the same was lower than 10% of the salary paid to the employee. So in this case we can see that the case law is related to the perquisite value to be calculated, wherein the rent-free accommodation is provided by the employer to the employee, and interest, notional interest on security deposit, whether the same can be considered as a perquisite value, since nothing is mentioned in Rule 3 regarding the notional interest calculation on the security deposit. The same cannot be calculated by the assessing officer or commissioner appeals in this case, and accordingly the perquisite value is the rental value, or 10 or 15% of the salary of the employee, whichever is lower as per Rule 3, and nothing extra needs to be calculated, which in this case is the notional interest on the security deposit. So Bombay High Court delivered the case law in favor of the SSC. Now the next one. Now the second case law is a High Court case law, Punjab and Haryana case law, CIT TDS versus Director, Delhi Public School, 2011. In this case, the issue under consideration is whether the free or concessional educational facilities provided by the employer to the employee, and the educational facility is provided to the child of the employee of the SSC, wherein 1000 per month per child is an exemption limit as per Rule 3(5) of the income tax rule, So whether this limit of 1000 per month per child is a standard deduction will be allowed as a standard deduction while computing the perquisite value, wherein the benefit of educational facility exceeds 1000 per month for a child. So whether this limit can be allowed as a standard deduction while computing the perquisite value is the issue under consideration. On your screen, can the limit of 1000 per month per child be allowed as standard deduction while computing the perquisite value of free or concessional education facility provided to the employee by the employer? Facts of the case: as per the provisions of Rule 35 of the income tax rules, in case of an education institution is maintained and owned by the employer and free or concessional education facility is provided to the employee's household in such institution, then the cost of education in a similar institution in or near the locality shall be taken to be the value of perquisite in the hands of the employee. In case the cost of such education or the value of benefit does not exceed 1000 per month per child, the perquisite value shall be taken to be nil. So only if the cost or the value of the perquisite of free or concessional education facility is less than 1000 per month per child, then it will be entirely exempt from the perquisite value as per Rule 35. What does the provision says of Subrule 5 of Rule 3? Provided that the education institution itself is maintained and owned by the employer and free educational facilities are provided to the children of the employee, or where such free education facilities are provided in any institution by reason of his being in employment of that employer, nothing contained in this subrule shall apply if the cost of such education or value of such benefit per child does not exceed 1000 rupees per month. So this is the extract of Subrule 5 of Rule 3, which clearly says that nothing will be taxable if the cost of the education is less than 1000 per month per child. However, you can see there is nothing mentioned related to whether any standard deduction of 1000 is available or not. It straightforwardly says if the value is less than 1000 per month per child, then nothing is taxable. However, it doesn't mention anything that if the value is higher, then at least a deduction of 1000 per month per child will be available to the employee. It is silent on it. SSC's contention: in the present case, the cost of education was more than 1000. Therefore, while determining the perquisite value on the above basis, the SSC claimed a deduction. High Court held that on a plain reading of Rule 35, Subrule 5, Rule 3, it flows that in case the value of perquisite for free concessional educational facility arising to an employee exceeds 1000 per month per child, the whole of perquisite shall be taxable in the hands of the employee, and no standard deduction of 1000 per month per child can be provided for the same. So High Court is of the opinion that 1000 per month per child is not to be taken as a standard deduction. it will come into picture only when the total fees is less than 1000 per month per child, and accordingly nothing will be taxable. If the actual expenses are more than 1000 per month per child, then the amount will be entirely taxable as perquisite value. Continuing on the screen, it is only in case the perquisite value is less than 1000 per month per child, the perquisite value shall be nil. Therefore, 1000 limit is not a standard deduction to be provided while calculating such a perquisite. So in this case, the High Court of Punjab and Haryana delivered the case law which is not in favor of the SSC, wherein it was held that the 1000 per month per child limit is not to be treated as standard deduction. It will be allowed, or it will come into picture when the total expenses related to education facility provided to the child of the employee is less than 1000 per month per child, and in this case the entire perquisite value will be exempt in the hands of the employee. Now the next case law, the same is delivered by Madras High Court in the case of CIT versus R. Rajendran 2003. So friends, in this case the issue under consideration is whether the commission received by the employee whether the commission received by the employee thereon, the expenses incurred by the employee to earn that commission will be allowed as deduction to the employee or not while computing his tax liability. So Mr. Rajendran in this case is a salaried employee and he receives salary, and over and above that, if he achieves his target, then he receives commission based on turnover. So the contention of the SSC is that whether while earning while earning this commission income, the expenses incurred related to the commission will be allowed as deduction to him or not. On your screen, whether expenses incurred in earning the commission will be allowed as an expenditure. Facts of the case: employee working as a regional area sales manager of the company. Sales manager, there is a customary practice that sales manager receives an incentive in the form of commission wherein they achieve their sales target. So he was paid salary and a commission based as a percentage of volume of sales effected by him. Employee claimed the expenses incurred by him for earning the commission in the return of income, which were disallowed by the assessing officer. So SSC is of the view that he should be allowed deduction of expenses incurred for earning the commission, whereas the assessing officer disallowed the expenses in the hands of the employee. High Court's observation and decision: it was held that since the SSC was employed as a regional sales manager and the commission paid to him, before proceeding to it, I mean, just a brief note. I mean, how do we analyze this commission sales, wherein an employee is receiving a commission and over and above the salary is also receiving a commission, whether expenses can be allowed to him or not? So first of all, what you can analyze in this case is the commission income under which head the same should be subject to tax, whether it will be taxed under the head income from salary or whether the same can be held as taxable as a business income of the SSC. So he's a salaried employee. He's receiving a salary, and salary is paid by the employer, and as well as the commission is paid by the employer if certain conditions are satisfied. So here the payment is by the employer to the employee out of the employer and employee relationship. Any payment out of this relationship is taxable under the head income from salary. So commission will be taxable under the head income from salary, yes, and thereafter the deductions which are allowed under the head income from salary, let's analyze it. The deductions which are allowed is a standard deduction of 40,000 or 50,000 from financial year 1920. Second deduction is entertainment allowance under 16(2), which is allowed to a government employee. And the third allowance is professional tax of 2,500 annually under 16(3). So you can see, as far as deduction is concerned, the employee is allowed deduction as per section 16, and as per section 16 there is no mention of additional deduction of expenses incurred to earn that income. So if you see the provisions of income from salary, there will be no additional deduction allowed other than the deductions allowed under section 16. So as far as our analysis is concerned, commission income is taxable as salary income, and deduction and expenses thereon won't be allowed as deduction in the hands of the employee, only because the commission income is treated as salary income and there are no additional deductions allowed. Because if he's allowed deduction on commission, for example, then why not on salary income? If there are certain expenses that he is incurring, that an employee is incurring for earning salary income, then will he be allowed deduction on the salary income? No. Accordingly, on commission income also, he won't be allowed any deduction. So High Court's observation and decision, it was held that since the SSC was employed as a regional sales manager and the commission paid to him is based on the volume of sales effected, such commission was obviously paid to the employee as an encouragement to affect a higher level of sales. The commission paid in addition to what the employee was getting as a fixed salary would also constitute or is also a part of salary. Again, the commission paid in addition to what the employee was getting as fixed salary would also be part of the salary. When the commission is chargeable as salary, then no deduction is allowable in respect of any expenditure incurred to earn the commission. This is what High Court held. This is what the High Court's decision is. Therefore, in this case, the claim made by the employee is not valid and the expenses incurred for earning commission are not allowable as deduction while computing the salary income. So expenses won't be allowed as deduction against the commission income. This is what is held by the Madras High Court in the case of CIT versus R. Rajendran. Now moving on to the next case law. Now friends, let's continue with the fourth case law. This case law was delivered by Rajasthan High Court in the case of CIT versus Shiv Charan Mathur. In this case, the issue under consideration was whether reimbursement of medical expenses to MLA will be taxable as perquisite in the hands of MLA or not. So here on your screen, whether reimbursement of medical expenses by the state government to MLA. MLA is nothing but member of Legislative Assembly. To MLA is taxable as a perquisite or not. Facts of the case: Mr. X, the MLA, was a MLA. He underwent an open heart surgery abroad, in respect of which he received 5 lakhs from the state government towards reimbursement of his medical expenses. The assessing officer contended that such amount is taxable as a perquisite under Section 17, High Court's observation. So, first, let's analyze as per our provision. And how should we analyze this provision wherein the nature of expenses is reimbursement of medical expenses to MLA by the state government? First of all, anything that should be taxable under the head salary, income from salary, the basic component, the basic requirement is that there should be employer and employee relationship. So the question is whether MLA can be stated as an employee of state government or not. This is the question. If yes, if the relationship between MLA and the state government is of employer and employee, then the payment, then such reimbursement will be taxable as perquisite. If not, then nothing will be taxable. I mean, not under the head income from salary will be taxable. This reimbursement won't be termed as a perquisite value. MLA, if we see, are the elected representatives of the society. They are not appointed by the state government, but they are elected by the general public. So, the basic requirement of employee and employer relationship is missing over here. A MLA won't be treated as an employee of the state government. So there is no employer and employee relationship, and accordingly, such reimbursement of medical expenses won't be taxable as perquisite under the head income from salary. This was our analysis. Now, what was High Court's observation? Rajasthan High Court's observation and decision. High Court observed that MPs and MLAs do not fall within the meaning of employees. They are elected by the general public, the election constituencies, and it is consequent upon such election that they acquire constitutional position and are in charge of constitutional functions and obligations. The remuneration received by them after swearing in cannot be said to be salary within the meaning of Section 15, since the basic ingredient of employer and employee relationship is missing. So there is no employer and employee relationship between MLA and the state government, and accordingly nothing will be taxable in the hands of the MLA as salary under Section 15. So the next question which arises, then where the amount will be taxable. Of course, there is a benefit which is provided to MLA in the form of reimbursement of medical expenses. The same will be taxable under the residuary head, under the head income from other sources. Whether there is any reimbursement, whether there is any salary or any payment in monetary terms to the MLA, the same will be taxable under the head income from other sources. Therefore, the remuneration received by MPs and MLAs is taxable under the head income from other sources and not under the head salaries, only because the employer and employee relationship is not there when the provisions of Section 15 are not attracted to the remuneration received by MPs and MLAs. The provisions of Section 17 also would not apply, as Section 17 only extends the definition of salary. Section 15 is the charging section, and Section 17 is a machinery section wherein it is acting to whatever is instructed as per Section 15. So if Section 15 is not applicable, accordingly Section 17, which is related to the perquisite amount, would also not apply. Thus, reimbursement of medical expenditure, which was sought to be calculated as a perquisite value by the assessing officer, incurred for open heart surgery abroad to MLA, cannot be taxed as perquisite under Section 17 only because the relationship between MLA and the state government is not of employer and employee relationship. Accordingly, Rajasthan High Court held in favor of the SSC, wherein the reimbursement of medical expenses incurred abroad for the open heart surgery of MLA is not taxable as income from salary, but the same will be taxable as income from other sources. Now, next part is the concluding part wherein an illustration is mentioned, wherein there will be mention of a case law as well as a solution. So, this is analysis or this is a discussion of the case law in the form of illustration. On your screen, an amount of 12,50,000 paid by ABC Limited after approval by the board to a hospital in US for the heart surgery of its managing director was charged under medical expenses. So here medical expenses are reimbursed or medical expenses are paid on behalf of the managing director of the company for which approval of the board of directors was taken, and thereafter the company paid directly to the hospital in US. So here payment is on behalf of the managing director, and second para, the assessing officer while completing the assessment of the company takes the amount so paid by the company as perquisite in the hands of its MD. So the amount was treated as perquisite in the hands of managing director by the assessing officer and accordingly was included in his total tax liability. So friends, in this case, you can see the issue under consideration is whether medical expenses incurred by the employer on behalf of the managing director will be taxable as perquisite or not. So first let's analyze the provisions of section 17 wherein the reimbursement of medical expenses incurred abroad by the employee will be taxable subject to limit of RBI. So if anything is over and above the limit of RBI as prescribed by RBI, anything over and above the limit prescribed by RBI will be subject to tax. Obviously, the employer and employee relationship should follow. So first of all, MD and employer, MD and company, whether there is employer-employee relationship, yes, because managing director is into a dual relationship wherein a dual role wherein he is treated as a director as well as employee of the company. So there is an employee-employer relationship, and thereafter we will have to analyze whether there is any mention of the RBI permission, or whether the limit is crossing the limit which is prescribed by RBI. In this question, there is no mention of it. So, in absence of information, we will have to consider that whether such limit was considered by the assessing officer or not. So, assessing officer has taxed this amount as perquisite. The entire amount is taxed by the assessing officer as perquisite in the hands of the MD. So, before that, whether assessing officer has considered that it is within the RBI limit or not. And second question will be whether indeed the perquisite value, whether indeed the reimbursement of medical expenses is taxable in the hands of the director or not. Solution: a managing director generally occupies the dual capacity of being a director as well as employee of the company. In this case, assuming that MD is also an employee of ABC Limited, clause 6 of the provision to section 17(2) would get attracted. So here there is a dual capacity which MD works on. It's a director as well as an employee. In this case, there is no mention whether MD is also an employee of the company or not, and it has been assumed that he is an employee, and clause 6 of the proviso to section 17(2) is getting attracted because of the employer and employee relationship. And 17(2) clause 6 to 17(2) proviso to clause 6 17(2) states is a provision related to the reimbursement of medical expenses. As per this clause, any expenditure incurred by the employer on medical treatment of the employee outside India shall be excluded from perquisite value only to the extent permitted by the RBI. Therefore, the expenditure on medical treatment of managing director outside India shall be excluded from perquisite to the extent permitted by RBI as per clause 6 of the proviso to section 17(2). If it is assumed that the entire amount is permitted, there will be no perquisite value chargeable in the hands of MD. Therefore, in such a case, the action of AO in taxing the entire amount paid by the company without analyzing whether the same is permitted by RBI or not as a perquisite in the hands of MD is incorrect. This question can also be answered by applying the rationale of the Allahabad High Court ruling in the case of CIT versus DP Kanodia 2018. So they have relied, the facts of the case are similar to the case law, is similar to the case of CIT versus DP Kanodia, in which it was held that, which we will be covering subsequently in the subsequent slide, in which case it was held that the reimbursement of medical expenses by the employer to the director is not taxable as perquisite as per 17(3)(1), which is a specified employee category. So as per this case law, any reimbursement of medical expenses to the director on behalf of the director, in those cases there is no perquisite value to be taken and nothing is taxable as perquisite in the hands of director. In that case, the High Court observed that reimbursement by company of medical expenditure incurred outside India by the director cannot be considered as an amenity or benefit provided by the company to its director, and therefore the provisions of section 17(2)(3)(a) would not get attracted. So here the only difference is there is nothing mentioned in this case law of the managing director, but a director is mentioned over here, wherein the benefit of reimbursement of medical expenses was not treated as perquisite in the hands of the director. Hence, applying the rationale of the above case law to the facts of this case, the action of the AO in taxing the amount paid by the company as perquisite in the hands of MD is incorrect. So, applying the facts of this case law, DP Kanodia, it can be concluded that the reimbursement of medical expenses to managing director is not at all taxable in the hands of MD as a perquisite. So, the two scenarios, whether anything is permitted by the RBI, the facts of the case doesn't mention that. However, it has been concluded that assessing officer is supposed to see whether it is within the RBI permission limit. The limit is within the RBI permitted, that needs to be analyzed, and as per the facts of the case of DP Kanodia as held by Allahabad High Court, it was held that medical expenditure reimbursed by the employer to the director will not be taxed as a perquisite in the hands of the director. So, applying that rationale, the MD won't be taxed on the reimbursement of medical expenditure by the employer. So, friends, this concludes the case laws. We have discussed overall total 5 case laws and which were related to the provisions of the income from salary. Thank you.